Hey everyone, today I want to take a couple minutes to go through and reiterate just the fact that we are not in a bull market in tech stocks anymore right now, at least not for the intermediate term. And this is just such an important point. I keep seeing people that are looking to just blindly buy dips and acting as if the market in some of these tech names is the same as it was for the past number of years, and it's just not. So I'll give you just a couple of little statistics here. And what I'm doing is I want to just walk you through not only what our market rover is telling us, but also how you can measure what the average stock in, say, the Nasdaq 100 has been doing. And so what I got here to start off with is the QQQ Nasdaq 100 ETF that everyone knows. And if you look at some of the constituents, the holdings, you can see the Apples of the world, the Microsoft, top two holdings, 12.5 and 10% respectively. Now, if you want to have a better idea of what the average stock within the Nasdaq 100 is doing, you take an ETF like the QQEW, which stands for equal weight. This is the first trust Nasdaq 100 equal weight index fund. And if you bring that up, you'll see the constituent holdings are all about the same in terms of the actual amount of the ETF. And you have the same holdings, of course, right? Apple and so on and so forth. But you can see they're all about 1-ish%, which of course makes sense. That's like 100 stocks times 1%. So that's an important thing to understand. Now, if you take this a step further and you just look at where we are in the Nasdaq 100 and just, again, very simple logarithmic analysis, and then make this a weekly chart. We do still think that the Nasdaq 100 has another leg lower to go. We are still, by all measures, extended in the bigger picture. This is a long-term weekly chart, algorithmic. Even if we take out the 09 lows and kind of smoothen that out, you're looking at an index that has a lot lower to potentially go. And I don't think we go as low as that line, by the way. But the line could catch up ultimately with price, which ultimately could see a reconnect of these two terms over time, of those two of price and line. So again, the higher the line goes, the further out in space with time we go, the more this will catch up, just by virtue of the line still being upward sloping, of course. So that's one way. Now, what we like to really focusing on is making sure we don't get stuck in these kind of drawdowns. So I just want to show you guys, for example, the average stock. Again, the average stock in the Nasdaq 100, not just the Rokus of the world, which are much, much worse even, but the average stock in the Nasdaq 100 has now dropped about 20% over the past year. So we've been in a rotating topping market really for the past 12 months. And I think a lot of people look at their portfolios at the end of 2021 and notice that they haven't really done so well. So this is just an important point to make, and I've reiterated this many times. I just thought I would do it once again today. So again, the average stock in the Nasdaq is off by 20%. You can just very simply look at that by looking at the QQEW ETF. What's also interesting, and this is where names like Roku and PayPal and so forth come into play, is that almost half of the stocks in the Nasdaq have gotten cut in half over the past 12 months. So again, look at Roku, right? And what you'll see is that, and I'll just quickly go to the actual chart here. Roku, from its highs in 2021, we had a double top, ended up falling 72%. And you can go on down the line. PayPal, this one too, a big drop, down 60+%. So again, what's important here is to make sure we don't get stuck in these drawdowns. And one way of doing that is by using our market rover, which told you to buy Roku in the August of 22, green background, and from a trending perspective, right? And told you at the latest, get out there in August of 2021. That still would have made 150% for you, by the way. But it told you very clearly to not be in that stock anymore since August 2021. We had a neutral period, and now it's bearish. And if one would have shorted the stock since September of last year, around 320, it's now down 160, 70 bucks. That's one hell of a trade. So again, the point is more to make sure to respect the trend, respect the environment, and respect that this is a different environment than we had for the past number of years. So if you're still finding yourself chart chasing, some of the darlings out there, some of the Rokus, and some of those kind of names, we're in a different environment. I do think ultimately a lot of those names will come back to life, but we're in a different environment that we were for the past 12 years. And something like, again, like the Market Rover can really be of tremendous help and saved you a lot of money if you would have just gotten out knowing the signals much before. And that's exactly what we did also with our members in Inner Circle. Hope it helps. See you again soon.